Hello, investors. This is Zhang and Connor Bates, Associate Portfolio Managers with Revere Asset Management. Today is Sunday, June 30th, 5:02 p.m., coming to you from Fort Lauderdale with this weekend's Revere Roundup weekend walkthrough. So let's jump right into it. So the market trend gauge, market leaders, we have in a bullish uptrend, but there is some weaker action. So we have that yellow arrow at the bottom. Short term, still above the 21 EMA, even though we had this bearish outside reversal after making new all-time highs, which is why we have that yellow arrow as well. Medium term, still above the 50-day, so have that green arrow, and then long term, still above those 200-day moving averages. And like what we talk about in every video, as long as we're above the 200-day, there's nothing too much to worry about in terms of the uptrend. So to quickly recap the notable events that happened last week. MU failed to meet investor high expectations. Hold on, let me get that ticker up for you guys on earnings. And that led to about a 5 to 7% gap down. And it closed weak as well below this. Here I have the 10 and the 20. So that is definitely seeing some weak action. We are monitoring it against these highs, though, as our place to risk off. There continues to be a lack of broad participation. I'll just quickly show that. The S&P, let's get a weekly chart up, was down 41 basis points, and the RSP, actually, no. Yeah, so the QQQE also tried to break out and failed so far. RSP continues to be in the space. So we want to see these two ETFs break out to kind of signal to us that the other components of S&P and the Nasdaq are participating. Jobless claims came in at their highest level since November 2021. Consumer confidence came in stronger than expected, which is good for the markets. And then PCE on Friday showing disinflation continuing is also good in terms of the Fed and what they want to see inflation do. Also, on the political front, we had that Trump and Biden debate, and now there's even more heightened uncertainty surrounding whether Biden will even continue being a candidate or whether he will remain. So markets don't like uncertainty, so hopefully that gets resolved and we get more clarity in that front. So quickly, let's go over the S&P. Like I talked about, we made a new high Friday and saw outside day reversal on high volume. So that puts in a distribution day, but just keep in mind, this was the end of the quarter, so there's always some funky action with mutual funds, hedge funds, and institutions rebalancing their portfolios. The QQQ, same thing, outside day reversal, but still above the 10 EMA, also on high volume, and we had some distribution these 3 days too. So now that's about 3 days of distribution within the last 6 to 7. So that's definitely something we're watching out for, especially as I'll point out later, we still have bearish divergence of breadth. Mid caps still below that year-to-date high anchor VWAP, rejecting it again, but we are basing here. If we go to a weekly chart, still very constructive base. So if we can really get out here, breadth should expand. And IWM kind of same story. I'll get a weekly chart here, get rid of those drawings. The Dow, kind of same picture as mid caps and small caps, but for this index, we are above those key moving averages, and we continue to tighten up on this right side. So if we take out this 400 level and this 395, 400 level, that definitely is constructive. Our big 8 or big 7 index continues to trend along nicely. Outside day reversal, but still above the 10 EMA. The Revere RG8, pretty similar picture as well to the mid caps, small caps, and Dow. We continue building this base and forming this right side, so that is constructive. What is interesting that happened after PCE is that the short bonds sold off less than the long bonds, which means the yield curve steepened more, which is starting to uninvert. And what would probably happen is once the Fed starts cutting rates, that yield curve may uninvert completely. The dollar continues to be strong here. On the weekly chart, we'll get rid of these lines. We back tested this weekly level and we bounced off of it so far. And so if we make a higher high here, that could put some pressure on the markets. Gold, still within this rectangle that I've been talking about for the past few weeks, just trading in a range right now. Silver continues to flag above its weekly level. Still looks pretty constructive. We had high volume up, breaking this weekly key level, retested it, broke this upper key level, and now we're retesting that again. So if this holds, expectations that it moves higher. Copper starting to leak off a little bit below the 50-day. And then finally, Bitcoin is finding, let's get rid of these lines, is finding support at the 60K level. And once again, undercut and reclaimed it. And then on the weekly chart, it pretty much just bounced right off the 30-week moving average, which is definitely a place on a longer term trend where prices find support. And this is still building constructive base, so it's not done at all yet. Okay, so going on to breadth, net highs started coming back into the markets, but still very slim, and we still have that divergence. As you can see, we had a lot of highs up here, and we made a relative new high, but new highs or net highs have decreased. Same with the NASDAQ, and we're actually in net lows territory with this outside day and breadth deteriorating. That's definitely something to be aware of. However, the NASI and NISI, so these are they pretty much depict advancers and decliners. This has been a steep downtrend in oversold territory, and we're starting to get a first sign that it's turning green. Same with the NASI. So just overall in breadth, there's a lot of mixed signals, and which is why we don't rely on the breadth indicators as our primary decision-making tool. We look at the leading stocks as well as the indexes. As I've pointed out in the past few weeks, breadth divergence continues, bearish breadth divergence continues with percentage of stocks above the 50, 150, and 200 in downtrends while the indexes are making new highs. And that's definitely what we don't want to see. And we want to see breadth resolve itself. NASDAQ, same story. CNN fear, greed, and the AAII and NAM are also painting different signals. We're still in the fear territory, but on the AAII, we've been 3 weeks historically above the bullish averages, and then the bears are above or are below the historical averages. And then the NAM still in that upper range above 80. So mixed picture there as well. Connor, so do you want to talk about some sectors and stocks you've been looking at?
Yep, I'll share my screen here and yeah, go over some ETFs and some focus list names for the week. So ETFs wise, so IGV had a really strong week last week. It popped back above these moving averages, and it's had it bottomed here, and now it kind of broke out from here and it's moving higher. So clearly there's money flowing into software right now. So it's short-term extended. So I'll be looking for little right side development in the space, as it's been a pretty V-shaped bounce. Hacks another one. So obviously cybersecurity stocks off the lows here, it was the leading, the strongest sector to be in. And then it had this was about a 15% correction. Now it's got back above all the moving averages. This RS line's hooking back up. So this sector is back on focus, and just a couple tight digestion days here could set up for the next leg higher. But the space looks great. And if we pull out to the weekly, this just looks like a big weekly cup and handle breakout. So, and the leaders are acting well, CrowdStrike, PANW, etc. KRE, so this one has been underperforming for quite some time, but Friday was up 3% on 131% above average volume. And as you can see, it got back above these moving averages, held that 200-day, and clearly it's tested this 45, 46 level, one like 3, 4 times held. So now it's coming back up. I think this still needs some work, but nice to see some volume come in, and if it can rest a little bit on the right side and set up a pivot through 50, this could be a nice mover. And then XBI, This one has been setting up. It's setting up for a base breakout here over this 93, 95 level. And like how each pullback's getting smaller. So this was the first one, second one, and now it's getting super tight under this base breakout level. And one thing to note is the individual stock action, medical stocks, biotech stocks, they've been dominating my scans, and my 3 and 6 month relative strength scans are just have a ton of biotech stocks. So clearly seeing that in the individual stocks as well for this sector. So this is a good one to watch moving forward. And obviously this would just help breadth expand, and this sector can run hard when it goes, you can see, and it moves similar to IWM. So that's something to know. Alrighty, and we'll get into some stocks. Halo, this is a medical name as well. Like I mentioned, I'm seeing a lot of these stocks come up on my scans, and this broke out of this huge base, and it had this big volume day here. So this is setting up for a breakout through this 53 level. Show you the weekly, and yeah, the weekly just broke out of this pretty nice base. So this is on watch for continuation. Kava, still our initial buy was right here, and I just wanted to bring this one up because this continues to trend. And on the weekly, about 4 weeks tight. So maybe if it can break out of this 4 week tight, it could go for that 100 level. Datadog, huge move the last 3 days. And this is another software stock that's been underperforming, but this is definitely back on my radar after these last 3 days and had some volume. So this is kind of like pocket pivot volume in the base, and that can sometimes be an early sign that and help you get into something before the actual breakout. So this one's shot up really quickly, and buying 3 days up in a row usually isn't the best. So if this can pull back and, go sideways for a bit, then I think, it could set up a pivot and take a look and try to get back to those 140 highs. And if you look at the weekly, really good. It's been uptrending, and now it's kind of breaking out of this weekly cup and handle. Oracle, this one gapped up on earnings, had a strong reaction. I like how this is acting. It shot up a little bit. Market has been pretty slow and hasn't been going up too much. So this kind of pulled back with the market, held this 140 level, which is around that high volume close. So this looks good for continuation out of the earnings flag. If you look at the weekly, just broke out of the base. So I think it looks good. Reddit, continue to watch this one. This is coming back up into that 66 level I've been talking about. It got rejected here, failed breakout there. So now it's coming back. And yeah, I like how this is holding up relative to other things in this internet content. There's a lot of stocks in this group. You have Amazon, Snap, Shopify, SE. So seeing a lot of good action there. So maybe if this can consolidate right below 66 and set up for a breakout through that way and kind of handle out a little bit more. Palantir, another software name, watching it through this 25.5 level. In the weekly, I mentioned it last week, but kind of a base on base pattern. So this one, if it can, get through there, I like this base and how it's coming up on the right side. Toast. So this payment processor industry group, it was a lot stronger and it's came way off. But Toast, I mean, this is one of the best stage one bases I'm kind of seeing, and I think a weekly close over this 28 level could put this into stage two, and the earnings is good numbers here, sales as well. And seeing the product myself in a couple restaurants, but seeing other stocks in this group as well start to act well. So watching this one, got alerts over 28. Shift 4, this is another name in that group, kind of starting to get over this little flat base here. Has been underperforming, but finally starting to get its way back. And you can see the RS lines improving quite a bit. And this is a good name. I've been watching it for a while, and the price just never cooperated, but now it's starting to look a lot better. PANW with Cyberstock strong. This had a really nice upgrade last week, and this was the day that it shot out of this flat base, and it down 0.5% on Friday. Pretty tight day. So watching this one for continuation as the group's acting well. TTD, the trade desk. this just has a really nice base. It's been consolidating between, this 60 and 100 level for quite some time now. And if you look at the weekly, it is not into highs. So maybe if it can have a weekly close above 100, this would be a huge trading range that it would be clearing. ESTC, another software name, got smoked on earnings a couple quarters ago, but since then it's kind of came back in, and you can see this was the initial gap, and it undercut this a couple times, came back in, and this kind of looks similar to, like Palo Alto. It's coming for a flat base. Maybe it fills the gap and continues higher. And the weekly looks a little bit better, less noise in the daily for sure. CrowdStrike, this has got a 3 weeks tight pattern here, and continues to act really good, and the leader in the cybersecurity stock. So if this one continues higher, I would imagine the other stocks follow. Amazon, really strong 2-day fall through off this breakout, but it's starting to come back into the pivot. So as we know, most breakouts come back and retest it. So I think, if it comes back, tests this 192 level, that could be a good spot if you miss the breakout for a for a continuation higher. And then DPST, I mentioned regional banks and biotech, and I just sometimes these can be better than individual stocks. So DPST is the levered regional bank ETF, and then LABU is the leveraged biotech ETF. And obviously, you want to use the underlying when charting, because obviously this looks a lot different than the actual triple levered, because it decays and stuff. So yeah, short trading week. So we'll see 4th of July this week. So those are some names that are on a wider list. Some are, I think, are ready for this week. So we'll just take it day by day. Ted, I'll shoot it back to you for the economic calendar and stuff.
Sounds good. Let me share my screen. So yeah, quickly, there's absolutely no earnings of significance this week, as you can see here. And to the economic calendar, I'll leave this right here just for you guys to view real quick. I'll point out a couple things this week. The first thing that is probably important continues to be just inflation numbers, and then unemployment slash labor market data. So we have ADP employment Wednesday, initial jobless claims, and then we have the Fed's minutes at 2 p.m. Continue on. Friday is also a big day. Oh, by the way, it's July 4th, so shortened week, no markets on July 4th this Thursday. And then Friday, we come back with the full employment report. Unemployment rate, hourly wages, that's when the non-farm payrolls are released as well. And that's definitely a data point the Fed looks at. I think, Connor, that will wrap it. Do you have anything else in mind?
Nope.
Okay, sounds
Nope.
good. So, yep, that's gonna wrap it. So as always, you can reach out to Connor at revereasset.com, myself, Ted at revereasset.com. You can also reach out to Dan and Don at revereasset.com. And if you have any friends, family, or acquaintances that might be interested in what we do, just send them our video, tell them to check out our daily videos, our podcast, and maybe they would be interested in our services. So yeah, this is Ted Zhang and Connor Bates from Revere Asset Management, and today is Sunday, June 30th. And I hope you guys have a great weekend, and we'll see you back next week.